Hello everyone, this is Garyraze of Remax Integrity here in Lane County, and today's topic is credit scores. And now back to our subject, credit scores. Today I have with me Mr. Ron Smith of Opus Advisors, and Ron is a mortgage consultant for Opus Advisors, and that's one of the largest lending institutions here in the Western United States. And I thought I'd ask him some questions about credit and credit scores because that really is something that deals with all of us. So first of all, Ron, thank you for helping and being here today. As we begin our discussion, what exactly is a credit score?
Well, a credit score is basically a risk analysis score. I mean, the whole industry of lending is kind of predicated on the comment that risk costs money. So the lower the risk to the lender, the better the rates and fees. So credit is a huge component. So the credit score is just a risk analysis. How much of a risk are you to a lender?
So how are these numbers determined?
What happens is when we order a credit report, we order the credit report from the major bureaus, Equifax, Experian, those guys. And then just before it comes back to us, it gets shot through this filtering system, which is in fact the credit scoring system. So everybody starts with a perfect score, but depending on what's physically on your credit report, everything will get assigned a value, and then subsequently it will create your credit score because it will subtract from the perfect score to get your score.
What is a perfect credit score?
Not to be exact, but the scores basically went from 350 to 850 in a mortgage credit report.
850 being the best?
Yes.
Okay.
Yes.
Okay. So why are the scores so important, well, for example, in purchasing a home?
What happens is the lenders have, in my industry, we call them a loan level price adjustment. In other words, credit scores are bracketed. And so as an example, a top tier would be a credit score of 760 or higher. So if your credit score is 761 or 825, it doesn't matter. You're in that top tier. But then it's every 20 points below that, rates get higher. So let's say someone had a credit score of 620 versus somebody that had a credit score of 820, you would expect to pay at least 0.5% higher in interest rate.
No, and 0.5% has a rather big impact on a mortgage.
Absolutely.
Okay, that's important to know. So how would one, say, improve a credit score?
Lots of times what we'll do is we'll sit down with people before they're getting into the home purchasing process and review their credit scores, see if there's any issues that are either not theirs or can be altered. Lots of times the fastest way to affect your credit score is if you look at the percentage of, and this only affects your revolving credit like credit cards, what's the percentage of your credit line to your credit limit. So if you had a $10,000 credit card, but you had $9,000 on it, you're using 90% of the availability. What you want to do is try and get that somewhere 50 or 30% down there,
okay.
And that will boost up your credit scores.
So if you have a limit of 10,000 and you've only used, say, 3,000 of that, that is much better than if you've used 7,000 or 8,000 of that.
That will absolutely raise your credit scores. Yeah.
Okay. So to improve a credit score, say, quickly, what would you do?
That's the way. Is look and see if you have any revolving credit that is got a higher percentage of usage on it. That's really the fastest way to do it.
You know, I've had clients in the past, and we've talked about this before, where they get so excited that their house is closing in 3 days and they want to go out and purchase, say, furniture. Is that a very good idea to purchase furniture before they move into the home?
Really a bad idea. What happens is, and this happens behind the scenes, and as a consumer you don't even know this is happening. We are monitoring your credit report from the moment you take application until this loan funds. So if you have anything happen, you go out and you get an inquiry to even if you want to go test drive a truck or something, and there's an inquiry to see if you're actually a looky-loo or a real buyer for the automobile company, or if you go and shop for furniture or you're going to look at appliances, we get instant notification, and now we have to address it. We're going to come back to you, we're going to say what's going on, prove it, did you get new credit? It can really cause headaches.
So that really goes back to the amount of income you make versus how much debt you've acquired.
Yes.
And if you've acquired new debt in the latest month, you're going to know that right up to the day of closing. Is that accurate?
That's absolutely correct.
So
we monitor everyone's credit to the day of funding.
And of course, we knew that answer, but the point is, don't buy a truck, don't go buy anything on credit if you're in the process of purchasing a home. This is very important because some people have in the past gotten excited, went out and purchased their furniture for their new home, and then they ended up, their ratio of income to debt changed and they were not able to purchase a home. That's devastating. So we don't want that to happen. Our listeners probably would say, well, how do I check my credit score? And I've heard that we shouldn't check it too often because it'll affect our scores and so on. What advice would you give our listeners for how to check your credit quickly and hopefully for free?
There's a couple things you can do. There's the website called annualcreditreport.com. There's a bunch of knockoffs. So annualcreditreport.com is the one that the government requires that every credit bureau give you a copy of at least one credit report per year. So my name is very common. It's Ron Smith. So about every 3 or 4 months, I pull one credit report from just one bureau instead of doing all three. So I'll pull one from Equifax, wait a few months, pull one from Experian, wait a few months, pull one from TransUnion, just to kind of see what's going on, because that gives me an opportunity. Because my name is so common, I get errors. I get stuff that gets put on that wasn't mine. So if you want your credit score, I think they charge, don't hold me to this number, but I think it's $15 or $20 to actually get your scores.
I see on TV, they're always advertising for free credit reports. Is that legitimate?
It can be. What happens is, and as strange as this sounds, that there are algorithms to calculate these credit scores. Remember, it's a filter system. So depending on what your credit is being used for, whether it's a credit card or a car or a mortgage or whatever, there's different algorithms. So literally there's about over 40 different credit scoring models out there. So, if you go to, like, say, Credit Karma and you get one credit score, you could literally go the next day to an automobile dealership. They would get a different credit score. You come to me, you'd get a different credit score because we're all using different algorithms. So, Credit Karma, if you kind of watch it, that's a free one. And you can kind of see if you just look for the movement. Is it going up? Is it going down? Because the number may change, but the movement should stay consistent.
Okay. Well, the important part is the higher the credit score, the better off we are for everything. And with the credit card industry, once you've made some errors, like you've missed a payment or two, that affects your credit with everything because they report that. And your credit interest rate that they charge can sometimes go up significantly. So anyway, for what that's worth, that's what it's all about for this week as we start our new year, by the way, and we want to make sure that our credit is under control and it's the best that it possibly can be, especially if you're looking to purchase a home. Again, this is Garyraze of RE/MAX Integrity in Lane County, and until next time, you take care.